In the heart-pounding world of retail, a storm of economic chaos has unleashed upon the famous retailers, pushing them to the brink of collapse. The latest numbers are a chilling testament to the dire situation. Retail sales plummeted yet again, with inflation mercilessly sapping the buying power of shoppers and rising interest rates strangling their access to credit. It's a brutal dance of survival as companies struggle to stay afloat amidst soaring costs for merchandise, labor, energy, and transportation. The sinister specter of debt looms large, squeezing profit margins to the bone. These once giant retailers have been fighting for survival long before the current crisis, clinging to a tenuous thread that now threatens to snap under the weight of worsening economic conditions. The fate of several declining popular brands hangs in the balance, and their disappearance from the retail landscape seems imminent. As the countdown to their potential demise ticks away, we present you with a thrilling roster of 15 big box retailers teetering on the edge. First on the list is a venerable staple, an iconic office superstore that has been on a downward spiral for nearly a decade. Crippling revenue losses from shuttering 225 locations set the stage for its downward spiral, and the pandemic dealt a crushing blow. With remote work on the rise, desperate measures like eliminating stores and slashing jobs couldn't stop the bleeding. The recent 6.7% drop in sales during the first quarter of 2023 paints a grim picture, leaving the brand on the precipice of redundancy in the face of fierce online competitors like Amazon. The question remains, can it survive the unforgiving recession? Next in the David Bridals is a heart-rending tale of a renowned wedding apparel brand that once filled dreams with hope. But now, after over 7 years in the business, it faces the haunting specter of bankruptcy. Inflationary pressures and seismic shifts in the wedding industry have dealt fatal blows, leaving over 9,000 jobs in jeopardy. Attempting to restructure its debt, the future of this beloved brand hangs in the balance, with creditors showing little faith in its survival. Will it be a fond farewell, or will a savior step in to rescue the brand from the clutches of oblivion? Then we come face to face with the crumbling empire of Walgreens, a once mighty pharmacy chain with almost 8,700 stores across the United States. The year 2023 has been brutal, with 450 store closings and its stock plummeting to an 11-year low. Grim profit forecasts and weak sales growth paint a bleak picture. The weight of $13 billion in debt threatens to drag the company under, with shrinking cash reserves casting a shadow of uncertainty. Is Walgreens' reign coming to a cataclysmic end? Rivaling Walgreens, Rite Aid finds itself fighting a losing battle against larger competitors. A relentless decline in foot traffic and shrinking profits have left Rite Aid struggling to keep pace. A once vibrant force in the pharmacy world has diminished, leaving it desperately gasping for survival. In this gripping saga of retail warfare, the stage is set for a dramatic showdown. The fate of these iconic brands hangs by a thread, and only time will reveal if they can endure the relentless storm of economic turmoil. So dear audience, stay tuned, keep your thumbs up for support, and subscribe to our channel, for this is a thrilling story with a climax that will leave you breathless. The once mighty chains of retail are now hanging by a thread, teetering on the brink of collapse. Let me take you on a thrilling ride through the chilling tales of their downfall. 5 Victoria's Secret, the iconic lingerie empire, is facing a harrowing storm. Its stock has plummeted a staggering 41% from a year ago, and a jaw-dropping 65% over the past 12 months. The company's desperate attempts at revival after its bankruptcy filing in 2020 have failed to impress. High-priced items are driving away American consumers, while fierce competition from independent and online brands is rendering Victoria's Secret products obsolete. The chain is bleeding stores, with over 300 closures in 3 years and 50 more scheduled to shut down this year. Experts ominously predict that a second bankruptcy might be on the horizon, as profitability issues continue to worsen. Ziax's Foot Locker, once a mighty shoe retailer, now finds itself on the bankruptcy watch list. The company's performance has been nothing short of disappointing, with sales plummeting and foot traffic dwindling. The retail giant is contemplating the closure of up to 400 U.S. stores, and even its Champs Sports subsidiary faces the axe. Net income has taken a nosedive, and the tough economic backdrop is only adding to their woes. A 27% crash in their stock in just one day paints a grim picture for Foot Locker's survival. 7. Home Depot. The behemoth of home improvement is feeling the tremors of a slowing economy. Consumer spending on home improvement projects has come to a screeching halt, with sales taking a 4.5% hit and income decreasing by 6.4%. Global data and retail expert Neil Saunders warns of an underlying softness in the economy and the potential chilling knock-on effect on the home improvement category. Even those not moving houses are cutting back on discretionary spending, leading to further declines in Home Depot's fortunes. 8. Kohl's. The department store chain is spiraling into darkness. After hiking prices relentlessly, it now faces a 7% decline in full-year sales. Persistent inflation has deterred middle-income consumers from splurging at their stores. Quarterly sales and profit have taken a hit, leaving the company in a state of stagflation. With over 1,100 open stores and mounting operating costs, Kohl's is on shaky financial ground, surrounded by a towering $5.46 billion debt. 9. Marshalls. The popular discount store chain is struggling to keep its doors open. Closures in various locations are sending shivers down the spine of this once robust retailer. Higher costs and mounting challenges have pushed the company to the edge, with Minnesota and Pennsylvania locations shutting down in desperation. The retail world is gripped by fear and uncertainty as these once glorious giants face their darkest hours. With bankruptcy looming, closures rampant, and sales in free fall, the future is uncertain for these once dominant chains. Who will survive the storm, and who will be lost in the swirling abyss of retail history? Only time will tell. In the world of retail, the stakes are high and the battle's fierce as iconic brands teeter on the edge of collapse. One such brand, a once revered convenience store, 7-Eleven, is now grappling with a disastrous situation. Despite its attempts to stand out from competitors, its sales remain stagnant or worse, plummeting into negative territory. Blaming it on the uncertain economic climate, the company faces a nightmare scenario. Shares nosedive, erasing all their gains from the previous year. A fierce internal war between 7-Eleven and its franchisees only adds fuel to the fire. The franchisees rebel against the company's insistence on 24/7 operations, struggling to find staff for the overnight shift. The feud erupts into a costly legal battle, jeopardizing the entire franchise model and putting billions of dollars at risk. Desperate to salvage something, 7-Eleven slashes hundreds of jobs and seeks to sell off its brand and sister companies, leaving the future uncertain and teetering on the brink of collapse. Old Navy, a veteran in the retail world, faces its own harrowing challenges. Plagued by mismanagement and indecisiveness, the company fails to keep pace with the fast fashion industry, leaving it trailing behind. A series of blunders, including late fashion trends and profit-killing discounts, lead to disastrous sales figures. A CEO vacuum leaves the ship adrift and the clock is ticking. Customers turn their backs, leaving the company bleeding money and jobs, seemingly on the brink of extinction. Urban Outfitters, once the haven for trend-conscious youth, now faces the consequences of its own mistakes. Inflation takes its toll on its young demographic, and management's blunders lead to soaring prices and plummeting sales. The company finds itself in a downward spiral, with hundreds of stores at risk of closure, and darkness looms on the horizon. Lowe's, a giant in the home improvement sector, receives a brutal blow from the rising cost of living. As consumers tighten their belts, visits to Lowe's stores drop significantly. The housing market's health directly influences their fate, and as housing sales take a nosedive, Lowe's future looks grim. Giant Eagle, a trusted food retailer, faces a harsh reality amidst the ongoing economic downturn. Consumer shopping habits have changed, and closures become a necessity to avoid financial catastrophe. In a bid to survive, the chain undergoes a drastic restructuring, but the looming threat of food inflation hangs heavily over its uncertain future. Piggly Wiggly, a pioneer in self-service food retail, now stands at the crossroads of its own demise. Revenue losses, higher costs, and an outdated business model push many of its locations to the brink of closure. Hindered by its lack of a robust online presence, the retailer struggles to adapt, facing a make-or-break moment that could define its fate. The stage is set for a turbulent storm in the retail world, as the American economy plunges into historic depths. Job losses rise, consumer spending declines, and stagflation cripples the nation. As the months pass, iconic stores may vanish, leaving behind a landscape forever changed. The battle for survival rages on, and only time will tell which brands will emerge from the tempest, and which will be lost to history. Brace yourself, for the winds of change are howling, and the retail world will never be the same again.